Welcome to Introductory to Accounting. I'm Dr. Donna Barris. Even though this is week 2, this is our very first true robust lecture. So let's get started. Now, last week I asked you guys to introduce yourself in Blackboard and ask you just what do you think and what you know about accounting. I got some really great response. I read every single one of them. Great job. Awesome start to the entire semester. However, even though some people have an idea of what accounting is, let's put some definition behind it so we can get some concrete, formal idea. All right? Please get out your pens and paper and let's get started. So, what is accounting? I alluded to this before, but accounting is the language of business. It is the system of summarizing, analyzing, and recording financial transactions. Every single person that, if you've ever handled, touched, seen, exchanged, gotten money, has done some form of accounting. Even the homeless man on the A train. And I will try and prove it today before we're done with this class that the homeless man on the A train does some form of accounting. So we know what accounting is, right? It's the language of business. It's a system of summarizing, analyzing, and recording financial transactions. Now, right underneath it, there are two main types of accounting. There's financial accounting and managerial accounting. Now, managerial accounting is usually most for internal users. So think about it of the bookkeepers or any form of back of the napkin, something that is not standardized, that you're doing quick math. So think almost like a budget. So those will be types of managerial accounting. Financial accounting, though, is used or activities or reporting that are for external users. So think about it more structured, formatted, rigid. So think about it almost like your tax returns, any 10Ks or any big company financial reports that are standardized and they all look the same. This is because they're governed by certain rules, guidelines, and guardrails that they have to follow. So those are types of financial accounting because they're rigid and they're for external users. So your shareholders and your stakeholders that are outside, that would be some types of financial accounting. So we have accounting, which is the language of business. Everybody or most people does some form of accounting. Underneath, we have two main types. We have our managerial and we have our financial accounting. Now, under managerial, for this purpose, what we do want to get is just get a great foundation of accounting. Now, under managerial, one of the big ways or the easy way that people would do managerial accounting is through budgeting, right? What is budgeting? Now, I would say budgeting is the tracking the inflows and the outflows of your money. Now, here's the tip. Here's the trick. And I tell everyone, it doesn't matter if I'm teaching an intermediate or an introductory class. It doesn't matter what class I'm teaching. At the heart of all financial statements lies budgeting. What does that mean, Dr. Boris? That means that every single person, if you've touched, if you've seen, if you've handled money, you should do some form of budgeting. And this is where I am going to pause so that sink in. So you should do it. I don't care if you don't have a set amount of money, you don't have a full-time job, you have a part-time job, or you have no job. If you've spent any form of money, one of the ways in regards to you be able to have a good grasp of managing and understanding your money is knowing where your money is. And I've said this all the time to every single person in my class. My class, Dr. Boris's class, and I truly, strongly recommend that if you know anyone at City Tech, you ask them, have you ever taken Dr. Boris's class? One of the things they might tell you, I am extremely strict, but when you leave my class at the end of my semester, you leave with something that is in you for the rest of your life. So I'm not just here to teach you something for you to pass the class. I am here for you to understand your money. You're going to look at your money differently. Now, there's so many people out there that have gotten money, but because they don't understand their money, they lost the money when they got it. Don't believe me? Mike Tyson. He got, I think, 300 or 400 million dollars in his professional career before he was 40. All 400 million dollars went down the drain. He filed for bankruptcy. Oh, you don't believe me? MC Hammer. Oh, the list can go on and on and on. We have all of these individuals. I don't even want to touch the athletes, the other athletes, but all these individuals that have gotten money, a lot of money. But for some reason, when they got the money, they lost the money. But why? Why do you think they lose the money? Because they don't know. If they can't track when they got a little bit of money, when you have a lot of money, you'll not be able to track it. So my class, and I'll be perfectly clear, my class, what I want when you're done with my class is that you look at your money differently. And here's the tip. Here's the trick. It doesn't matter how much you have, know where your money is. Know where your money is. And that's through budgeting. So what is budgeting? You track your inflows and your outflows of your money. That is it. Doesn't matter if you have no job, if you have a little bit of job, some job, or even if you don't have a job right now. If you have some expenses, you should do a budget. Okay? So that way, when you train yourself to know where your money is and track where your money is, when you have a lot of money, it is not hard. You will continue to watch each and every dollar that is walking out of your pocket. So then when you have $100 million, you will still track every dollar so you don't become a Mike Tyson. All right. So one of the ways that you can do it is budgeting. And I really want to spend a good portion of today in budgeting. So as we've mentioned, what budgeting in a fancy way is the tracking of inflows and outflows of your financial transactions. I always give this activity to every single one of my classes. Now, a budget, super easy. It's a T form that most people can do. However, what most people don't understand is that you have certain little expenses that you probably don't even think of that is walking out of your pocket. Not on your week's discussion, but I want you to create your own budget. But before we get that, now let's discuss how a budget looks. So it is really super easy. So it's like in a T form, and I hope you can see it here. Some people can just do an easy T form. And on this side is what's coming in. So it's called income, right? So anything that is coming in. So for most people, that's like your salary, right? Let's say your allowance, because I don't know if some people are still at home, your mom give you allowance or anything. On this side, your debit side, it's all the money that is coming in. On your credit side, though, you have all your expenses. And usually now you have three main types of expenses, right? So your first expense that is that you would put is your fixed expense. So that is FIXED, right? And your second expense that you would put is your variable expense, VARIABLE. And your third expense would be your periodic expense, right? PERIODIC. So let's discuss now the three main types. So what are your fixed expense? As the definition sounds, those are expense that don't change month over month. You know the amount and it comes every month. For example, it could be like your phone bill. So if you have a set plan, that could be a fixed expense. Another example of a fixed expense could be the Metro card, right? So if you buy a monthly Metro card, you know every month how much you're going to spend on it. So fixed expense are expenses that don't change month over month. You know how much it is. Your rent, right? Your mortgage, your car payments. So your variable expense, though, for your variable expense, those, as the definition says, those are expenses that changes month over month. So your grocery bills, I guess you would think about like maybe your car, your fuel for your car. You would think some people would be your Metro card. So some expenses can be fixed, some can be variables. So your Metro card can be fixed for some, it can be variable for another. So How would a MetroCard be variable or fixed if I do a cash, right? Some people, if you are doing it as fixed and it's a monthly, that's fixed for you. You know, you spend X amount every month for a monthly card. However, if I am doing a cash pass and I only swipe when I need it, that's a variable expense for me because I only fill up when I need it, right? So your variable changes based on demand. Your grocery bills, you guys get the idea. Now, your periodic expense are once in a while that happens. So let's say you're budgeting, well, we're in COVID and we're in pandemic, so nobody's planning to go anywhere. But let's say you were planning to go to the Caribbean for your birthday and you're putting money aside. Okay, so COVID happened, we're not going to the birthday, but you're saying we're not traveling, but you're saying, you know what, I'm still gonna have a birthday party. Not here to judge, but you're putting money aside for a birthday party or something. So once in a while, something that only pops up once in a while, right? Probably gym membership. You'd be like, let me just pay it one time for the year and I'm done, right? So there are many different types of expenses, but they only fall in one of the three categories. So what I would ask you guys to do, I want you guys to start on your budget, okay? And I don't want to look at your budget. I don't have to look at your budget. Every time I give this assignment to my students, they usually start it in class and they put their T form and they put in how much money they have and they're fixed. List all your fixed. Don't just put it as fixed. You list it out. If you are serious about getting a handle on your money, list out all your expense. Do you go to Dunkin' Donuts? Write it down. Now list out all the expense that you have. And once you now have a list of it, and what I say to everybody, once you feel like you've done your budget, you're not done. Just put it down. And for a week, every time money goes out of your pocket, make sure it's on that budget. So give it a week. So do the ones that you know, your MetroCard, your gas, your rent, your phone bill, all the things that you know. But then don't say I'm done. Just put it to the side. And every time you dip in your pocket, oh, I'm running late, I have to run to the bodega and buy $2 sandwich. Make sure you record it. That way, at the end of the week or the end of you doing your budget, you're going to have a true understanding of the money that is walking out of your pocket. Now, let me see a hand of those who have kids, especially those who have young kids. Do you know where your kids are? Do you, for the most part, always know where your kids are? Do you know when they're going and do you know when they're coming? Treat your money like your kids. Know where your money is walking out of your pocket and know when money is coming in your. Now, when you're done, you might have an overage or you might have a surplus or a shortage, but then we can make action of it. But the first thing we need to know is where you stand, and you first have to get a grasp of it. So one of the homework that I'm assigning you to do, and again, I am not going to look at it. If you don't want to do it, I'm not going to grade it. But if you're serious about handling your money, you first have to do a budget. And I'm going to explain to you and show you that all major businesses does budgeting. It might call a fancy word, but they do budgeting. And I'll give you an example. So let's go back to our activity here. So let's put an example on it. So let's say our income is $100, right? So I have $100 right here, right? And let's say now let's do our expense. And I'm going to circle it so you can see it. So let's go over to our expense. That's all I have, just $100 as my salary that's coming in every month. Now, let's look at our fixed expense. Let's say our fixed expense is 30% of our overall income, right? So, or my income for the month is $100. So my fixed expense is 30% of it. So my fixed expense is $30, right? Now, let's say my variable expense, right, is 40% of it or $40. Right? So my variable expense for the month is $40. And my periodic is, oh, I actually do want to take this down. And my periodic is $10, right? So my income is $100, my fixed is $30, my variable is $40, and my periodic is $10, right? So now let's do the add up. So 30 and 40 is 70 plus 10, 80, and I have an income of $100, right? So I have 100 coming in and 80 coming out. So I have a surplus of $20, right? Now let's see. Yeah, Dr. Boris, I'm trying to buy a house or a car or something. So you know what? I wanted to actually save $30 for the month. You're probably going to touch your variable expense, right? So let's say you're going to be like, listen, I am not even going to buy any extra gas. I am going to do this at 30. So that's going to push up your overall variable expense. You're going to push your overall surplus to 30, right? Remember that I mentioned to you that all large organizations do some form of budgeting. So, and I mentioned before, I've worked for super large multi-billion dollar organizations. This is what I did. So this is September, right? So the only difference, I'm not touching this. I'm just going to put M for millions right here. This is what I do. I walk into the CIO office and said, for the month of September, I'm projecting $100 million in sales, or fixed expense, which is like our rent for our stores, are $30 million. Our variable expense are $40 million, and our periodic is $10 million. So we have expense of $80 million and sales coming in as $100 million, right? So $100 million and an $80 million expense give you a surplus of $20 million. The CIO says to me, yeah, Donna, we need a surplus of $30 million. Where do you think I'm going to touch? Do you think I can touch the fixed expense? The rent has to be paid. Variable expense. One example of variable expense could be people working in the stores. Your hours, I immediately cut that from 40 to 30. There do I have a 30. So, as you can see, there's absolutely no difference between the budgeting of a multi-billion dollar conglomerate and your budgeting. The only thing I changed here was I just changed it from your $100 to $100 million. At the heart of all financial statements lies budgeting. So if a multi-billion dollar company does budgeting, I strongly recommend you do budgeting and know where your money is at. So again, one of the homework that I'm going to give you, but this homework will not be graded. I am not going to be looking at it. But if you want to have a true understanding of your money, I recommend put pen to paper, sit down. After you've done this, after you've finished watching this, sit down, do a T form. Money coming in, oh, you don't have any money coming in, so that's zero on the debit side. But list all your expenses, just so you can have a grasp of how much money is walking out the door every month. And once you start training and you can see your eyes, everybody does some form of budget. Oh, remember the homeless man? Let's say you're doing your list and you're going and you see that hungry person. And you're like, I'm going to give you $1. Ooh, you need to make sure it's on your expense. That could be a once in a while, a periodic, or a variable if you're kind enough to always give to homeless people. But it depends on how much money you have in your pocket. That is a variable expense. Or if it's once in a while, that will be a periodic. But the homeless man also does some form of accounting. Why do you think he's on the train at 9 a.m. in the morning as opposed to 12 noon? Because he has analyzed that he would get a greater return when there are more people on the train. Do you think they just randomly go on the train? Why do you think they're on the A train and not the S shuttle? Because the A train has more people. There are more A train there. So he's doing analytical. He has a goal in his head. And because he's counting his money, he's trying to see if he's hit that goal. And if he didn't hit that goal and he can hit another train, he's going to go back. So every person, the homeless man, is doing some form of budgeting and analyzing and summarizing and recording in his head. He's recording that, listen, the A train is more profitable than the S shuttle, and it's probably not as profitable if I run to the J train. I don't know. but he is doing some using analytical skill sets to say where is the best place that I can get the best return. Now, if a homeless man is doing it, more you. So, in summary, we discussed what is accounting. It's a language of business. We discussed the two main types of accounting, managerial and financial. We discussed one of the ways that since at the heart of all financial transactions lies budgeting, and budgeting is the inflow and outflow tracking of financial activities. And once everyone should do your budget, everybody does, and you should do your budget too. And most importantly, there are three main types of expense: your fixed, your variable, and your periodic. So this week, week 2 online discussion, your Blackboard post, which will be due on the end of the 4th day of the workshop, which is about Thursday, will cover what we've discussed today. Now, I hope that everyone understood, but if there's any questions or concerns, please feel free to reach out to me via email. Okay, thank you. Have a good one.